How do you get wider ranges? Well, remember, we just talked about it. If option volatility expands, then you're going to be able to get the money that you want by taking less of a path dependence risk, right? Because our risk always in selling options is path dependence, right? Where is that stock going to go? You can be right on volatility, but right on the direction. And I'll show you some examples of that in a moment. So here's an example of how, look, in a low volatility environment. So this is literally from my course from a while ago, about what is that, about a year and a half ago. And this is where I was making the exact point that is important to why these people got killed. Look, you can have volatility option, you can have the VIX going sideways, basically doing nothing, and yet the market is rising, right? The VIX is doing nothing, yet the market is rising. Well, that's because you tend to get a kind of a drift up in a positive market, right? Why is that happening? Well, we're going into the end of the year. Volatility is compressing, right? As it often does going into Christmas and the holidays. And to get the money that you want, you're having to accept a more narrow range. So you have, on the one hand, it makes sense because it's supposed to be a quieter time of year. So it sort of is supposed to make sense. But what happens is you often get this seasonal effect.